This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending September 18th, 2021. Our question this week is, what is the U.S. debt ceiling? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.48% on Friday and was down minus 0.07% for the week. The S&P 500 decreased minus 0.91% on Friday and was down minus 0.57% for the week. The Nasdaq decreased minus 0.91% on Friday and was down minus 0.47% for the week. Looking at the week, we can see that there were 6 up finishes versus 9 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Tuesday and Friday, all 3 major indexes finished down. On Wednesday, they all finished up. And on Thursday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. The new unemployment claims were 332,000 versus 322,000 expected. Spot gold traded above $1,800 per ounce early in the week, but dropped for the rest of the week. America is short more than 5 million new single-family homes. Mortgage demand jumped 7% from last week. Solar prices jumped in the second quarter. Retail sales posted a 0.7% gain in August, and it was reported that Federal Reserve officials have been trading stocks and bonds that could have influenced their policy decisions. New unemployment claims, spot gold prices, shortages in new single-family homes, the mortgage rate demand, solar prices, retail sales, and Fed officials trading stocks and bonds are all news. And news drives the market. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the U.S. debt ceiling? The U.S. debt ceiling is a limit on how much debt the U.S. Department of Treasury can issue. It is like a credit card limit for the U.S. government. The President and Congress sets this limit, and they negotiate on what this limit should be. The problem is that the debt ceiling does not control the amount of U.S. debt. It is an after-the-fact measure. So imagine that your credit card company tells you what your limit is after you have already spent the money. Congress and the President usually raise the debt ceiling without much fanfare, except when a Democrat is president. The debate over raising the debt ceiling is political theater, as is most political disagreements between the 2 major political parties. These debates are designed to keep the public fooled. Delays in raising the debt ceiling can disrupt financial markets, increase U.S. borrowing costs, and threaten the faith and credit of the United States. Most countries do not have debt ceilings. Do you have the ability to raise your credit limit? Do you use credit to buy stocks? That is, do you use margin to buy stocks? Do you invest in stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. formal school taught you how to read, but society and the powers that be discourages you from reading. School taught you how to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending September 18th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Datadog Incorporated, ticker symbol DDOG. It's in the first column. It increased 4.36% for the week, but was down minus 0.7% on Friday. Datadog provides monitoring and analytics platforms for developer, information technology operation teams, and business users in the cloud environment. Looking at a summary of results, you can see that Datadog has increased more than 45% year to date. I did not trade Datadog this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 1.49% versus 18.06% up for SPY, a difference of 19.55%. The Southside is losing to SPY by just over 19.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit for a few months. And it had been recovering for the last month or so, but it has been struggling for the last 2 weeks. Will it get back on the recovery track? We'll see. The portfolio is 70.13% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 17.9% of the portfolio. Cash is 11.97%. The cash flow generated for this week was 0.45% of the portfolio account value. The account value changed by 1.8%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.91%. I sold option contracts on 2 positions this week. They were 2 calls that ranged from $233.39 to $273.39. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. Check out past videos for other questions of the week. They are listed in the description section. And please like, share, and subscribe.